Hey everyone! This conversation was recorded live on February 24th, 2021 at 5 p.m. California time between myself in San Francisco and Boyu in China. The first part of the conversation took place over the Clubhouse app, and the second part over Zoom because we had some connection difficulties. So, the audio quality, I have to apologize in advance, is not as good as it typically is or as I'd like. Still, I hope you find the content useful. Thank you so much for tuning in, and don't forget to subscribe. Inside Asia is the first club focused on Asia on Clubhouse, and I'm really pleased to be here today to talk to Boyu Hu, who is an early investor in Kuaishou. Before we start the event, let me give a little bit of introduction about myself. My name is Rui Ma. I run techbuzzchina.com, which is a podcast on China tech, and then also a community for investors and operators who are interested in China tech. So I myself currently consult funds and companies on anything and everything related to China tech. Boyu here is an old friend from when I was working in China, and he has graciously agreed to be here today. He's calling in from Beijing, so we actually have a separate Zoom setup going on just in case he gets disconnected. So, anyway, Boyu, I put your bio in the description of this room, but can you introduce yourself a little bit more to those who are just joining us?
Yes, sure, of course. Hi everyone. This is Boyu speaking. First, I want to thank Ray for inviting me to give this talk. Ray has been a longtime friend since the days I was at DCM, I think. That was like 7-8 years ago. Yeah. So it's great to be here. Well, a quick background on myself. I was an entrepreneur before. I grew up in China, went to college in Shanghai, and then co-founded a company in college. It was a software company offering credit risk management software to the banks in China. And actually, the company is now the largest credit risk management software company in China, listed in Shenzhen Stock Exchange. I worked there for about 10 years. I led the product development of our core product lines, and then left the company in 2008. I went to Kellogg for an MBA in 2008. I did the 1-year program, and then returned to China and became a VC. So my job at DCM actually was my third job in the VC industry. I was at DCM from early 2011 to 2014. And then I worked at another VC firm called Bull Lake Capital for 2 years, and then started XVC. So that's my quick background.
Right. XVC is your own fund, and you guys have about 600 million under management right now, right?
Yes, across US dollar and RMB. Yeah, now we're managing our second US dollar fund.
Cool. So my first question for you, Kuaishou, for those of you who don't know, is one of the most recent IPOs that's been wildly successful. It's, I think, almost $200 billion right now in market cap, but it is a competitor to ByteDance, which operates TikTok, and Kuaishou is also a short video company. So I want to ask you, Boyu, to talk about that deal, but specifically, could you also just use that story to tell about what VC was like in China almost a decade ago? What were the things going on? Who are the big players? And how can we tell from this really exciting deal, the Kuaishou story, about the environment that was China tech 10 years ago?
Okay. Yeah. When I made the investment in Kuaishou, it was in 2014, May of 2014. Maybe a little bit background. The company was still very small. It had about just 8 employees, including the founders. They were working in an apartment. Their number of users were, daily active users were something like 900,000. It was growing fast. They had about 30,000 new users per day, and all of them are organic users. At that time, about 10% of the daily active user would upload at least one video, and about roughly another 15% of the people will share at least one video outside of the app. Most of the shares were on WeChat, and that drives a lot of new users. So we saw a virality there. It was the more users they have, the more new users they have. And also we have seen a very positive feedback loop in the usage of the app and the activeness of users, because we've seen growth in not only user but also retention and time, the amount of time people spend on average per day in the app as the community grows. About 15 million in the company at the pre-money valuation of 60 million, and after dilution for post-round ESOP dilution, I think we owned about 17.8%, around that. So that was the background of the deal. Let me get back to your other question. What's the environment then, right, in China?
Because this was a competitive deal, right?
Yes, it was a competitive deal. I think the company has seen at least 10 investors, and they've got multiple offers. And when we submitted our term sheet, they already had one offer from another leading firm. And I think, now people are talking about the deal in media. Now it's public information now that offer was from Sequoia. Valuation was lower than ours, and we have signed the term sheet. I think on the same day when we offered them the offer. So it was a very competitive deal. I heard that they have also got some other offers. The most competitive one was Sequoia.
Got it. So I mainly wanted you to give that background because I want you to contrast it with what it's like today. Also, Kuaishou at the time, it had pivoted from a different product, right? And the original C2B2C Morningside, now called 5Y, brought in a CEO. So brought in a new CEO and kind of restructured the company. And the new product was what really took off. And this is when you guys invested. So when you think about like the dynamics of something like that today, number one, is it more competitive today? And how would you evaluate a similar deal in today's environment where the original team had to absorb a whole new founder that they hadn't worked with before, would get you to want to put in a term sheet right away?
Let me get back to your first question first. Mm-hmm. How is the competitive environment today? Is it even more competitive? The simple answer is yes. There are more funds today. The leading funds have more money. Sequoia today is now like 10 times bigger. And Hill House is doing early stage investment. Even Morningside is raising like $1 billion early stage fund. I heard that GGV has a $2 billion in one fund. So it's a different world. People have lots of money and lots of people are joining the game. But I would say early stage investment is still a place where it's not a game of just money and being the top brand. If you look at the top deals in the last couple of years, in the last few years, you still see that these companies, when they raise their Series A and Series B, they sign the first term sheet they get. So being fast is important, and being able to understand the business, to realize it's a good company is still the most important thing, I think.
Wow, I didn't realize they signed the first term sheet they get.
You can say that even at that time, even for a competitive deal like Kuaishou, in its Series B, they have multiple offers. Well, the entrepreneur signed the first written term sheet, right? The offer from Sequoia was oral, and it was below their expectation. DCM offered the first written term sheet. That's above their expectation, so they signed it. And if you look at ByteDance, when they raised their Series A's, Series B's, they didn't have that many offers.
Yeah. Do you think that has changed today? Because Kuaishou and ByteDance both really, and Pinduoduo, of course, rode the rural China wave, right? The less developed parts of China, the users coming on because of the smartphone. This was their first device and they were being exposed to apps for the first time. Do you think that is still a place where you would invest a lot of money today? How has it changed?
Yes, it's still the place I would be interested. The urbanization process is still going on in China and creates a lot of opportunities. We have spent a lot of time in third, fourth tier cities. Actually, I just went to a fourth tier city just before the Chinese New Year and studied the retail environment there, looking for new retail type of opportunities.
You went there to do diligence to see if there were new brands or companies that you weren't aware of.
Yeah.
Could you talk a little bit about that? Because I know that there are other investors that do this too. Why do you think you have to go there in person to do diligence? What is the disparity that you see right now between how people live in first tier cities and fourth tier cities?
Yeah, as an early stage investor, you have to bet on things that will be very big in 10 years, in 5 to 10 years. And you have to be closer to the customers, to the market, to really understand it. A lot of things, you get most of your information from documents, from reports drafted by others. Your understanding of the world will be very vague. It's hard for you to picture.
So, how much time do you spend right now, like thinking about the rise of rural China and the opportunities in these rural cities?
Actually, we did a study, a quick calculation of our portfolio companies. I would say about 70% of the portfolio is consumer driven, consumer facing businesses, and 80% of these companies are targeting lower income people. If you draw a line, the average disposable income, 90% people about 80% of people are below that line. So most of our deals, most of our portfolio companies are targeting that part of the
Wow. Okay. So you're basically saying 80% of 70%, that's over 50% of your portfolio, are consumer companies targeting lower tier cities and their residents, which is funny because, like, one of the things that I was talking to Ron Tao, formerly of Lightspeed, and he had this great bit about the next China is China. And I believe that's also his strategy.
Lower tier cities, but just average income people. Beijing residents are below that line.
Got it. So you're saying the masses and not the elite. So there are also people living in Beijing who that would appeal to. Yeah, if you look at Kuaishou, for example, I believe like 15% of their users are in first tier cities or something like that. But what it sounds like to me is you're saying the opportunity is still there. So even though this Kuaishou was started 8-9 years ago, you guys invested 7 years ago, the opportunity is still really the same.
I think the growth of disposable income of that part of China is still at 10%.
It's still at 10%.
Well, the overall, yes. The income and spending power of that group of people is growing much faster than the average.
Like, I guess I talked to a lot of VCs, and some of them have pivoted a lot to enterprise and other deep tech, for example. But you've really stuck with consumer for a large part of your portfolio. So, what are some of the most interesting opportunities that you're seeing? Maybe some of your recent investments that you're really excited to talk about.
Sure. We are still pretty much focused on consumer. I would say we also do business service, supply chain. Well, that's a third of our portfolio. But the majority of our time is still focusing on consumer-related businesses. We still see a lot of opportunities. There are lots of, as we've seen some, in addition to the demographic change, the growth of disposable income, the urbanization, we have seen that the media consumption behavior have changed drastically in the last few years. People are spending on average 90 minutes per day on short videos. For example, the ad revenue of Douyin and Kuaishou is now 2x of all the TV stations in China. And we have seen dramatic change in retail channels as well. In third tier, fourth tier cities, the offline retail, it has been changing very fast, and online retail as well. So I give you an example. So the 4 new online retail channels are WeChat mini program, DD, Kuaishou, and Douyin. So these 4 new retail channels doesn't exist 4 years ago. That GMV of these channels were almost zero, and now how much is it? I think in last year it was over $600 billion US, and that's 2x of Amazon global. The magnitude of the change is just magnificent. So we're looking for opportunities that startups that can benefit from these structural changes. So I think a wave of new supplies will emerge. Next year, new retail channels or consumer brands.
Got it. So are you betting mostly on new brands then, and that take advantage of these new retail channels?
Well, both new retail channels and brands.
Could you talk a little bit more about the offline retail channels? Because that's something like I think that I'm recently seeing a lot more of.
Well, still in China, the retail industry is still mostly fragmented, mom and pop shops, multiple layers of distributors, right? Even in most verticals. So you can still see very large 批发市场 in China, a wholesale market, huge wholesale markets in China, and you don't see those in the US. So modern trade is quickly penetrating third, fourth, fifth cities. And in verticals, you can also see chained retail. Like you can see chained fruit shop, home. There's no Home Depot in China. IKEA is huge. Supermarket chains are growing really fast. And the largest supermarket chain is only 1/10 of that in the US. They're growing fast.
Yeah. That was actually a question someone had in our investor community asking, why is the supermarket chain so small, the largest one in China? But I think maybe it is just what you're saying. It's still it's still early days for offline retail. So going back to the online retail that you were talking about earlier, these new platforms, right? Of course, it's affiliated with Tencent. Compared to 7, 8, 10 years ago, do you think the BAT, and specifically I am talking about the old BAT, Baidu, Alibaba, Tencent, do you think they are relatively more powerful or less powerful? And also, how does that affect the startups you're investing in? Do you believe they should be aligned with one of these, either Tencent or Alibaba? Or is it starting to be maybe not as important because you have these other emerging platforms?
Yes, you're right. I think currently the BAT, these three companies are less powerful than 7 years ago because of these new platforms. But as a group, these new platforms are more powerful than before. That includes Douyin, Kuaishou, or Xingsheng Youxuan, Meituan.
So you're saying platform companies as a whole has gotten more powerful, but there's more of them. So each individual platform is maybe not as dominant as before. Does that make you more bullish about the entrepreneurship ecosystem and startups? There are all these platforms and it's much easier to scale up, right? Building on top of these platforms, especially something like WeChat mini programs. Is that better overall for the ecosystem, or you think there are disadvantages?
I think it's still too early to draw a conclusion. What we have seen in the market is that in the last 2 years, we've seen less platform type of opportunities. I'll give you an example. Was a very good company, right? That grew very fast in the last couple of years. I think they started their business in 2018, and by early last year, their monthly GMV was over $300 million US. So essentially, it was like $4 billion business by early 2020.
And here we got cut off a little bit because of connection problems. But the company Boyu is talking about is Xingsheng Youxuan, which is a community group buying company that was started a few years ago and saw a lot of success. Their main business model is to enable online group buying of groceries and other common household items, and have the consumer actually pick it up from the group leader, saving thus the last mile delivery costs. Okay, Boyu is back. We'll just do it on Zoom.
Sorry. Well, so what happened next was that Meituan, PDD, Alibaba, even Didi joined the game. And the fact that these companies are so rich, and they're just pouring money in the market and subsidizing consumers to drive growth, and made it very well. How to say that? I think it's the environment is when there is something big, all these companies will just go in, and they have so much money. So I think it never happened before. 10 years ago, 7 years ago, they would use sometimes they will copy your product. They have traffic, but the game is different.
Is it then more dangerous now? Because if you do have a hit product, potentially all the big platforms who are so well capitalized will come in. Or is it you're saying it's too early to tell?
Yeah,
This is actually...
I do think so. It's more dangerous. If you look at the competition between the companies, unlike in the US, these large companies, they can do a lot of things in the US unacceptable to the society. In China, but in China, it's reasonable. For example, they can just use an excuse to ban. For example, today still you cannot share a Douyin link in WeChat.
Yeah.
Right? People will never be able to share their links, their contents in WeChat.
Are you not optimistic that with the new antitrust laws that this will change for the better?
That is still unfolding. We don't know. We're gonna have to watch, but it could be a good news for startups.
Okay, you talked earlier about the investor ecosystem. What about entrepreneurs? Has anything changed in what people are working on compared to a couple years ago?
Compared to a couple years ago, yeah, one interesting change is that in Beijing, the salary of engineers has become very high, mostly because of ByteDance. Yeah. So I recently have seen some entrepreneurs moving to Shanghai because the cost in Beijing are becoming much higher. So that's one change in the environment. So anyone who want to come back to China to start a business, maybe you can take that into consideration. Overall, I think the fundraising environment is very good. It's much easier to raise funds than 10 years ago.
To raise a fund or raise funding?
As a startup.
Okay, yeah.
Lots of angel investors, lots of angel institutions, SVC. We do most of our investments in Series A's and B's, and we did almost 10 seed investments in last year.
So more early stage. Has the balance of power shifted because there's so much capital now? Is it just like a lot of capital chasing after a few quality entrepreneurs?
Yeah, I think that is the case. The entrepreneurs are gaining power because the valuations are going up. They're seeing more, and good deals are going away faster than before.
Could you give like maybe a number on the amount that you think valuations have gone up compared to?
10 years ago when I just became a VC, typical Series A was like 15 to 20 million. Is that still the case in the US? I think it's right.
Yeah, it's also much higher. Yeah. But what is it like in China now?
Yeah, in China now, a typical Series A would be between
30 to 40 million. Yeah, over a little over double maybe. Okay.
Yeah. And also the time between a seed and Series A will be like 4 months, 6 months. They might raise they might raise Series B in another 6 months. But the fact is, companies are growing faster than before.
So it's justified.
Yeah.
Okay. James, you had a question.
Yeah, thanks for doing this, guys. I'm wondering about what the fundraising environment is like, comparing RMB fundraising and USD fundraising, what the differences are in the last year and maybe right now as well.
So I think overall, the US dollar investors, institutions in the US and Europe are still more long-term thinking. And in China, we have seen more and more family offices joining the game. They're putting money into VC funds, lots of government money, but they all have their mandates. They ask for example, a capital city in a certain province would have like 10 billion fund, like a 10 billion RMB fund, and but they would require you to invest at least 1.5 to 2x of whatever they invest in your fund back into that city to create jobs, to support innovation. But that's hard. Most of the good startups are still in first tier cities.
Yeah. So that sounds like something that hasn't changed that much in the last 5 years since I've left. Okay. But it's really interesting to hear you say that more family offices are investing. Maybe I can ask a follow-up question, which is, are these family offices, is their wealth coming from tech and that's why they're interested in venture, or are these family offices whose wealth comes from other industries?
Yeah, the answer is no, because the tech money are US dollar.
Nancy,
Hi, Ray and Boyu. Thank you so much for doing this. So I have a question about e-commerce. Boyu, you mentioned earlier that there are four emerging platforms within e-commerce. My question is, who do you see is the biggest threat to Alibaba? And with specifically to WeChat mini programs, it seems to be a very popular channel as merchants focus on DTC and private domain traffic. How do you see WeChat mini programs evolving into the next 3 to 5 years? How big do you think they can get? Thank you.
Yeah, good question. I want to know too.
Yeah, I think now the biggest threat to Alibaba is obviously PDD. Main reason is because PDD has a different philosophy or different algorithm. It's optimizing its traffic for cheap and good products. Does that make sense to you? I don't know if I have explained it correct. Yeah. So PDD's algorithm is optimizing, will let products that's both cheap and good to get more traffic, to get more exposed to its customers. Yeah, while on Taobao, they would give more traffic to the ones that can pay higher advertising fee. So that's the key difference. If Taobao doesn't change that, I think it's gonna lose more users to PDD.
It's almost more buyer friendly on PDD. What about the second part of Nancy's question, which is on WeChat mini programs? Do you think that poses a significant threat?
Yeah, WeChat mini program is different. It's never. I think it will never become a destination for consumers to search for products. I think WeChat is using its unique position as a communication tool to become the CRM system for service product providers to manage their customer relationships.
Yeah.
Brands are all setting up all sorts of groups to manage their users.
Could you shed some light on the deal structures of the VC funds in China? In the United States, each early round is structured as a preferred equity with some liquidation preference and sometimes anti-dilution clauses. So is it similar in this early stage VC deals in China?
Yes, it's similar. It's very similar here in China. And yeah, the terms are more like 7-8 years ago. From what I've seen, the terms have been more friendly to entrepreneurs in the US in the last few years.
Wait, so are you saying the terms are still more entrepreneur friendly in the US than they are in China?
In the US, the terms have become more friendly in the US. That's the change happened in the US. Mm-hmm. It didn't happen in China, but it's slowly happening.
Yeah, I want to ask about China's clubhouse local apps, if I can put it that way. Because in the past few weeks, we've seen a couple of companies trying to copy or borrow the elements from Clubhouse to do their version for China, also maybe other markets in Europe. Do you personally see any investment opportunity in any of those startups doing so? And more broadly, I guess, what's your view of social apps in China?
Yeah, that's actually a very good question. We're watching. I know at least three Clubhouse copycats. We're closely watching them. I don't have an answer. If your question is how well these copycats will be doing, because the environment in China is different. But I do think it's a very interesting opportunity, and we're spending time.
Is social like a hot category right now? Do you see a lot of growth left in there, or are these by nature more platform companies and therefore not as attractive?
So the simple answer is no. It's not a hot sector in the investment community right now here in China. XVC is still spending time. So if we see interesting social media ideas, we would still spend time. Mm-hmm. We will still be very interested. I think in the last 2 years, the amount of investment and the number of investments and the amounts invested in social apps are much lower, smaller than before.
Since we have just a few minutes left, I wanted to ask if you have anything that you want, any closing remarks.
Well, actually, we invest in both returnees, and we also actually can invest in the US. Actually, we do have a portfolio company in the US, which is, I think some of you may be a user of that company. It's called We. It's been growing really well in the last couple of years. It's been one of the most successful portfolio companies we have. And I think about maybe 20 to 30% of our portfolio companies are founded by returnees. I think the entrepreneurship environment in China is very good. I welcome more people who are entrepreneurial to start business in the US or in China, and feel free to contact us. Just you can add my WeChat, which is the pinyin of my full name, Boyu. And if you see anything interesting, also feel free to send me a message.
There's a lot of people who believe that returnees cannot do well in China because they aren't quote unquote local enough. Is your statement just now saying that?
Yes. Actually, a lot of good companies are founded by returnees.
Is there a specific sector that they are better founders for, or you think it
varies by individual?
What about the returnee is most interesting to you?
Returnees they know more about technology. For example, we have seen a lot of very good enterprise software companies founded by returnees, right? Like platform as a service, cloud computing companies. Retail is different. I think retail needs local insights, and it's very cost sensitive, right? So usually the local retail companies are not founded by returnees. Consumer internet companies, many of them are founded by returnees, like Xingsheng we just talked about, right?
Got it. So not offline retail or new retail, but e-commerce and social might be fine. Okay, that's it. Thanks for listening. If you like this content, please subscribe to our YouTube channel, and you'll get alerts for other interesting conversations we have about China tech in the future. See you soon.